Assalamualaikum, we are group number 2 from BA 2404A, and for this subject, financial planning, we have chose 2 topics to cover up our case study and we will explain in our presentation. So the topics are insurance planning and investment planning. So group members consist of Nur Nabila, Nur Fatiha, Hanisa Shahira, Nur Shakina, and myself, Nur Aima. Our presentation starting with Hanisa Shahira with her introduction about insurance planning and investment planning.
Hi, Assalamualaikum. My name is Hanisa Shahira binti Hamdan. So right now I will present the introduction of insurance planning. So insurance planning is to protect yourself, your family and loved ones, your home, your assets or your business against unexpected events. The idea behind insurance is to get a group to contribute financially to help fund, specifically designed to help individuals recover in the case of an unexpected loss. In this way, insurance is financial burdens that can occur when disaster strikes. So we have 8 types of insurance planning. The first one is life insurance. Life insurance is a policy or cover that allows the policyholder's family to spend the money after he or she passes away. Consider the case of a low-income household with small kids, and if you die unexpectedly, it may complicate your family's finances. As a result, life insurance will ensure that this does not happen, at least to some extent, with your legacy, as they will be able to cover what is owed. So the second one is motor insurance. There are also policies that offer financial assistance to your bicycle or car in the event of an accident is motor insurance. So this insurance can be categorized into 3 types of motor vehicles, namely car insurance, a vehicle with 4 wheels covered by the policy, two-wheel insurance. Two-wheel vehicles such as bicycles and scooters should have coverage under this policy for future warranty. And commercial vehicle insurance. If you own a commercially used vehicle, you will need to register for motor insurance for the exact vehicle. This is because it will keep your business afloat, and in the event of an accident, the business will not incur significant losses. The third one is health insurance. Health insurance is general insurance that pay out money to policyholders if they are hospitalized or receive treatment. Furthermore, this financial help will be utilized to cover the cost of therapy at home, both before and after hospitalizations. The most 4 is travel insurance. Do you know that we also have a travel insurance plan? Yes, that's right. Such a policy is to ensure the safety of the policyholder during their travel while traveling. Although it is only traveling, but anything can happen while they are traveling, right? However, compared to other insurance plans, this insurance has short-term coverage. The 5th is property insurance. A building or structure that cannot be relocated is covered by property insurance. It is possible to register it on its own home or business property. If the property is damaged, the financial aid provided by the property insurance plan will assist the policyholder in replacing or repairing the property. It is important to keep in mind that such a strategy can help secure the property's content financially. Next is mobile insurance. Mobile phones are growing more sophisticated in this modern age, and costs will inevitably rise. As a result, if your phone is inadvertently damaged, you may recuperate money with this mobile insurance plan. Furthermore, if your smartphone is stolen, you may file a claim for money to replace it with a new one. 7th is cycle insurance. Some individuals like to ride their bicycles wherever they go. This is due to the fact that they are simple and do not come at a high cost. Our insurance coverage ensures that bikers are entitled to assistance in the case of theft or unintentional damage. As a result, the insured can immediately repair or purchase a new bicycle. And the last one is bite-size insurance. A bite-size coverage is an insurance plan that can help you reduce your financial obligations for up to a year. It can also safeguard your funds from being harmed, misplaced, or threatened. Introduction of investment planning. Investment planning is the process of aligning your financial goals with your investment resources. It is the main component of financial planning, which puts to use your savings and ensure you earn more money through investment. We have 6 types of investment planning. The first one is investment in share. Investing in shares is a popular choice among investors. Some young investors are also beginning to trade in order to learn more about the market and its current state. We must ensure that the firm they choose will invest their money where they want it before investing. In order to understand the market circumstances, investors must first do research. The value of the company's share may fluctuate from time to time. Stock risk and profit are also affected by current market circumstances. In the event of a loss, the investor will be the one to face the burden. The second one is investment in bonds. Bond investments are substantially less hazardous than other types of investing. This is explained further by the fact that bond investment provide very little profit. Because you buy the bond and pay the money to the corporation, this bond investment is similar to a loan because the investor will be reimbursed with interest. Third is investment in mutual funds. A mutual fund investment is the finest investing alternative. These investments can only be made in small sums. Investors are encouraged to examine the investment's development in future depth and consider making further investment. Fourth, investment in exchange-traded funds or ETF. Investing in an ETF is similar to investing in an index fund. Because ETFs are traded on the stock market, consumers may readily purchase and sell them. By taking into account the type of market elements, this sort of investment will benefit the investor. Furthermore, this sort of investment is becoming more popular as a result of the fact that it is rising in pairs every day. The fifth one is investment in real estate. There's one conventional technique of investing in numerous ventures, which is real estate investment. Before investing the money, they will do a property analysis. Once they have possession of the property, they are free to do anything they want with it. Furthermore, if the demand for real estate is great, they are able to expand supply at a higher price and are needed to maximize profit. The last one is investment in gold. Gold and jewelry investment, for example, are frequently employed by people for future savings or in times of distress. You ladies invest the most of these funds, especially during the Hari Raya season and when gold prices are low. This investment is simple and straightforward, and it is available to people of all age and genders, including children.
Hi, my name is Nur Emma, and today I will cover the part which is purpose of investment planning. Investment planning is to be a critical component of a comprehensive financial plan, which includes assessing risks and choosing the right insurance coverage to reduce those risks. So to get the peace of mind in the event of a tragedy, insurance planning's main objective is to identify and assess risk variables in life. Having insurance increases your chances of recovering partially or completely. As a result, insurance is a financial tool that transfers risk from a person to a business while also lowering uncertainty through pooling. So now we're going on to the purpose of investment planning. The investment planning is a key element of financial planning, ensuring that your saving is going to put in a good use and increase your income through investments. In order to maximize the return of your assets, having a plan for your investments provides you with a sense of directions and purpose. So, investment planning also enables you to select the optimal investment approach to achieve your financial objective.
Importance of insurance. The journey of life is not always as easy as we would like. Unexpected circumstances can throw us off balance or prevent us from fully living each day. Insurance can take care of the expenditures associated with potentially expensive situations, saving you the trouble. Because insurance will secure financial security for you and your family. If something untoward occurs, it is essential to your ability to concentrate on the important things in life. Insurance helps cover the costs when significant financial constraints, such as hospital bills or medical expenses, appear, enabling you to follow your dreams. One of the reasons for the importance of insurance is that it ensures the stability of families and businesses. When risks go awry, insurance provides a safety net. Might a family member pass away, life insurance can provide for their needs. The same goes for businesses. With insurance, the company may continue operating even if a crucial employee or piece of equipment fails. Other than that, insurance can also provide relief. Another intangible that insurance offers is peace of mind. Due to insurance, business owners can shift the risk and engage in specific commercial initiatives. Importance of investment planning. For a few reasons, investing your money is crucial. For future goals, to help in times of need or job loss, or both. You want to build wealth. in order to prevent your money from losing value over time. You need to also take advantage of compounding while accounting for inflation. Additionally, investment is crucial to help you reach your goals if you intend to retire and stop working at some point. Investment planning helps wealth creation. Investing can help you achieve your dream goals more quickly than money sitting in your bank account if you're trying to pay off debt, put your kids through college, purchase a house, establish a business, or save for retirement. You can enhance your wealth or the worth of all of your assets through investing. Besides, investment is also important for your retirement planning. If you intend to stop working and retire, you must have a sizable sum of money set aside to support yourself when you stop working. Between your savings and the amount you'll need to live on for the next 20 or 30 years, investing can help close the gap.
The COVID-19 pandemic from Wuhan started to spread throughout our country in 2020. When the first case of COVID-19 in Singapore was discovered on 24 January, Malaysia was able to identify 8 close contacts who were quarantined in Johor Bahru. After that, the total then rose to 420 cases after an increase of 190 new cases that tested positive for COVID-19. According to the initial report, the majority of new cases are connected to the Sri Petaling mosque tablet as a live cluster. However, at this time, Malaysians continue with their lifestyle only that they have to wear masks and keep their distance from 1 meter from each other. For example, when they want to buy something and so on. When Malaysia reported its first death on 17 March, their life completely changed in 360 degrees. They were told to stay inside and not to leave their own house, and only one person could go out to buy groceries or food. Additionally, they are required to work from home, which greatly increased the number of unemployed people because their employers are unable to pay their salaries, which means things are getting harder for people. After that, the number of COVID-19 cases increased significantly to a total of 8,639, and in the second half of 2020, there were 121 daily cases. As a result, the people will have to endure problems like losing their work or worrying if they become infected with the COVID-19 virus. So, this is when insurance plays a very important role in helping them during this pandemic to avoid such a thing happening. First of all, what insurance is offered during a pandemic is coverage by the Hospital and Surgical Insurance (HSI). HSI policy cover hospitalization and healthcare costs, including room and board, doctor and surgical fees, medical supplies and service, and more, resulting from covered illness or accidents. Every sort of infectious disease requiring quarantine, including the presence of COVID-19 outbreak, is typically excluded by the basic HSI policy. However, several insurers have decided to waive the exclusion and offer COVID-19 coverage out of sense of goodwill. This is in addition to any additional coverage that specific insurance may provide. Besides that, in Malaysia, insurance is also offered for travel insurance during a pandemic. In Malaysia, for people who want to travel during a pandemic, they get many benefits which are travel-related accidents, medical costs, difficulties, and other losses incurred during the policy-specified travel time that are typically covered by travel insurance policies. However, the majority of insurance will not allow travel to countries where the local or foreign government of the destination country has issued a travel ban or advisory. People are encouraged to contact the appropriate insurance for confirmation before travelling, as the terms and coverage of one insurance may differ from another. Therefore, insurance will cover everything if something unfortunate occurs to them while they are travelling, such as if they are infected with a corona, for example. Since we do not know how the situation is in another country, it is quite beneficial for those who like to travel to deal with situations like this. Furthermore, motor insurance. All motor insurance must remain in force during the MCO period according to Persatuan Insurans Malaysia, PIAM. People can renew their motor insurance online. Since COVID-19 struck our country, all of the tasks that can be done physically need us to line up 1 meter apart, which caused the line to become extremely long and take a lot of time. Therefore, by completing this online, we can both save people's time and prevent the COVID-19 from spreading across our nations. At the end of this, the nationwide lockdown restriction resulted in lower claims for general insurance in 2020. This had a positive impact on their profitability as loss ratio for insurance, especially motor insurance, which has decreased from 71.5% in 2019 to 63.8% in 2020. Malaysia has maintained its resilience in its basic economic fundamentals, supported by the many measures adopted by the government to soften the economic fallout. While not being spared from the majority of the economic impact caused by the COVID-19, the nation's medium-term prospects are likewise unaffected. Malaysia must expand its trade and investment linkage nonetheless if it wants to guarantee ongoing growth. Since the start of the COVID-19 outbreak, around 85% of investors in Malaysia have spent more time thinking about and organizing their personal finance. Expert investors are more likely to reconsider and spend more time thinking on their finances welfare than the intermediate investors and beginner investors. According to a Schroders report titled Schroders Global Investor Study 2021, Schroders said investors in Malaysia are likewise examining their investment with considerable regularity, with 52% checking the value of their investment more than once a week. Despite these difficulties, it was reported that 58% of the respondents saved the amount they had anticipated, 38% saved more than they had anticipated, and 50% saved less than they had anticipated. This shows that it was a positive year for savings. In addition, after the country's lockdown was removed, there was a split in how people saved and invested. According to Schroders, 58% of people have increased their overall saving contribution. It stated that 38% had increased their investment in high-risk assets, while 51% had increased their low-risk assets investment. The effects of the Malaysian pandemic on people's retirement plans follow the investment behavior and become increasingly pronounced. According to the report, around 80% of those who are not retired would prefer to increase their retirement savings as a result of the pandemic. But this doesn't necessarily correlate to the predicate retirement age. According to Schroders, non-retired persons believe they will retire later as a result of COVID-19, while some of them believe they will continue to retire at the same age and believe they will retire soon. The research classified the sample population as individuals who will invest at least 49% ringgit in the next 12 months and those who had changed their investment in the last 10 years. The pandemic has made many people feel more anxious and out of control by increasing their feeling of uncertainty and making it more difficult for them to process this. It is great to see that the pandemic has functioned as a catalyst for putting a deeper focus on general financial planning and well-being, despite the enormous difficulties we have all faced.
So, as you can see in the graph below, according to global data statistic, the life insurance industry has experienced 4% growth from 2019 to 2020 and expected to have over 9% growth in 2025. The increment caused by the economic slowdown and uncertainty over lives during the COVID-19 pandemic resulted in more consumer spending on life insurance. So I will cover another statistical data on investment planning. So these data have been taken from Prekin Industry Survey on how investors of private markets react to COVID-19. 29% of respondents stipulated they are planning on increasing their allocations to more illiquid strategies, 60% of respondents remain unchanged, and 9% of respondents probably will reduce their investment on private markets. Many investors now have a stronger urge to diversify their portfolios beyond traditional assets, which are by their very nature impacted by the daily market price swings as a result of the current global market concerns. That has meant some investors are also looking for income due to the low interest rates around the world and the anticipation that they will continue that way for longer years. So in conclusion, private market managers now have the chance to invest in sectors that have been impacted by the COVID-19 epidemic and market disruptions.
As for recommendation, insurance can help to secure financial security for our family when we go through a disaster. By being financially secure, we will have time to enjoy a decent standard of living because we manage to have a backup money for something unexpected, such as an accident. We will never know what we have to go through during that time, right? As I said earlier, in conclusion, start doing investment as soon as possible to help with financial problem when you want to retire early. Working many hours without stopping will make people think about retiring as they want to have their time traveling, shopping, or just want to support their money during retirement. Even during investment, you must have the feeling to spend the money for yourself. So we come into conclusion that insurance planning is one of the important things in our life, as it will be a backup plan or a money if something unexpected happens that can give you protection to our family and other assets or maybe businesses.
It is also can ease financial burdens that can occur when disaster strikes. But the person or the company should know what type of insurance plan they want to subscribe to according to the insurance policy. For investment conclusion, we need to start investing as soon as possible for our future goals to help in time of need, or maybe jobless, or maybe both if you want to build wealth. To prevent your money from losing value over the time, you need to also take advantage of compounding while accounting for inflations. Other than that, doing investment helps people who want to retire at an early age to enjoy lifestyle without having money issues.